You're listening to the Divorce and Your Money Show, the #1 show on iTunes that discusses the complex business of divorce. I'm your host, Sean Lehman, MBA and Certified Divorce Financial Analyst. And tax season is coming around, and I know it's not your favorite time of year, particularly with everything else going on, but I wanted you to hear directly from one of the best experts in divorce and taxes in the United States. Her name is Beth Logan, and she is going to give us an overview of some of the key tax considerations, not just when it comes to filing your taxes, but also when it comes to working out and deciding what assets you keep in a settlement. And you should realize that if you don't think about taxes, you could end up agreeing to a settlement that is financially disadvantageous to you. So Beth is going to walk us through some really important tax information that you can get access to and learn from her from. And also she has a great book. It's called Divorce and Taxes, 15 Things You Should Check Before You Sign the Divorce Decree. And check it out. It's easy to read. It's not too long, and it just covers all of the key tax issues that you should be thinking about during divorce. And I read the book. I use it as a reference all the time with my clients, and you should pick it up too. It's quick read, but covers a lot of really important ground, and it is by far the best resource on taxes and divorce that you will find out there anywhere. I know because I spend a lot of time looking for and reviewing and reading this stuff, and Beth's is the best. So without further ado, check out this interview with Beth Logan. Today I have with me on the show Beth Logan, and Beth is an enrolled agent, which she'll tell us more about in a moment, and also author of Divorce and Taxes, 15 Things You Should Check Out Before You Sign the Divorce Decree. Beth, welcome to the show.
Well, thank you for having me.
Before we get into some of the tax issues, which are very relevant at this time of the year, why don't you tell us a little bit about your background, and also, as a basic question too, is what does it mean to be an enrolled agent?
Well, my background is very odd. Well, it's not that odd for an enrolled agent. I actually am an electrical engineer by original education, which turns out to be pretty common with enrolled agents because, well, we're nerds and we like numbers, and enrolled agents are federally licensed tax professionals, which means that we go through a test, well, actually a 3-part test. We have a background check. We have to do continuing education. We have to be re-enrolled every 3 years. And it means that we have credentials. So we're not just somebody hanging their sign up saying, I know taxes. We actually have not only credentials, but we have to follow something called Circular 230, which is a level of ethics and standards required by the U.S. government for people to represent a taxpayer before the IRS. So tax attorneys, CPAs, and enrolled agents are the 3 groups that can represent a taxpayer before the IRS if they have trouble.
Got it. And what's the difference between an enrolled agent and a CPA?
Well, a CPA is a state-certified accountant. They have to do auditing. You'll find that they could do anything from accounting to taxes to auditing, or something called forensic auditing, where you research the books and look for issues. So they could do various different things, and they usually specialize. Where enrolled agents specialize in taxes, and so we don't spend the time doing the auditing portion that's needed to become a CPA.
Got it. And just so people understand a little bit more about you, how many books have you written?
Well, I've now written 2 books they're both on taxes. The first one is The Voter's Guide to Tax Policy, which covered the 17 candidates of last year's election. But as I tell people, it's actually a good overview of the different policies that politicians, anybody in Congress today could write tax policy. And it's a good overview of those various types of policies that are being bantered about as maybe ways we should go. But it's still actually relevant, and I have a blog as well, and on my recent blog I just discussed the congressional GOP's current plan that they're creating legislation for as we speak.
That's great. And for the listeners, I do encourage you to check out her blog as well. We'll give the information later and also in the show notes. This is information that, even though taxes seem complicated, and they are, but it's very good and very well written and an easy summary to really understand what's going on in the news versus the reality. But that aside, let's focus on your book, Divorce and Taxes, 15 Things You Should Check Out Before You Sign the Divorce Decree. At a high level, why are taxes important to consider in divorce?
Well, anytime you're dealing with finances, which you are in divorce, there's a chance that you can make tax mistakes. I often tell people that the most tax mistakes are made from May to December. And the two reasons for that is people aren't thinking about taxes and there's more days. If there's more days, there's more chances for mistakes. But on any given day, you could do something that ends up hindering your tax situation. And divorce is a big one for that. People think about, well, I'm going to take a child and my spouse is going to take a child, so we both can claim head of household and therefore we're done. There are many more, which is why I wrote the book, because I was finding that people came to me who had just gotten divorced and they missed some opportunities to save a lot of money.
I think that makes sense. And I do want to touch upon just a few high-level issues for people. Is the first being is your tax filing status. And while you're still married, maybe in the divorce process, but still legally married, kind of what are the general options that you have?
Well, in general, when you're married, you either file married filing separately or married filing jointly. But there is a little option in there if you have not lived with your spouse for the last 6 months of the year. It's actually, when you go to file it somewhere in the January, February, March, April timeframe, you had to have stopped living with your spouse by June 30th. So you have 6 months within that year, that tax year, and have not then returned to living with your spouse. If you've done that and you have a child or some other dependent, you may be able to file head of household. But it's a narrow window, so you need to make sure that you meet all the criteria for that. But in general, if you're married, and you have to file married.
Got it. And I've heard many times that for most people, married filing jointly is the best way, while still married at least, to save money on taxes. So why don't you explain why that is? And then also, why might someone consider married filing separately? When would that make sense as well?
Well, the main reason why married filing jointly is better is because the laws restrict some of your credits and deductions if you do married filing separately. The main reason for that is because they are limited by income. For instance, if you are wealthy, if you're making $300,000 a year, you don't get to take all of the exemptions and deductions. So what they don't want somebody to do is file married filing separately to hide the spouse's high income and try and take those deductions. So what they say is if you do married filing separately, you don't get to take any of those. So because of that, married filing separately is often worse for a couple because there's a lot of things they can't take advantage of. But at the same time, when you sign that paperwork, you are signing for everything on there, regardless if it's your information or your spouse's. So usually if a spouse has a business and the other spouse doesn't have the ability to see the records and the financial information on that business, we may advise against you filing jointly because you are signing that you believe the numbers on that business are correct. If it's what we call a Schedule C business or sole proprietor, or even some other information, if you think your spouse is hiding money and income, then it's not worth the risk of signing because you become liable as well as your spouse, even if it's your spouse's money.
Got it. And just to take that a little bit further, what kind of penalties or consequences are there that exist if you are found liable for something that maybe your spouse did?
It could be as minor as you need to fill out some paperwork and show that you really truly didn't know and would have had no ability to know the missing information. And it could be as major as fraud, which can be considered criminal. So it could be you owe all the tax money plus penalties and interest and could spend time in jail. So it just depends on the severity of the error, what I'll refer to here as an error, but if it's fraudulent, it's more than an error in the return. So it depends on the situation.
And let's switch gears. Let's say you get divorced this year, or maybe you just got divorced last year. We'll say you got divorced last year, just to keep things very simple. What are your options from a tax filing status perspective then?
Well, as I said, when you were married, you're married and you filed married. And that occurs even if you get married at 11 p.m. on New Year's Eve. If you are married at the end of the year, you're married for the year. And the reverse is true. If you get divorced on December 31st, you are divorced for the year, and you file either single or head of household if you have dependents. The only way you would have gotten divorced during the year and filed as anything else is if you get remarried. Then you're married at the end of the year to somebody else. So your option really, though, is to be single or head of household.
Got it. And switching gears to the children, is how do you determine, or how does the tax rules determine who gets to benefit from child-related tax benefits, and also kind of what are the big ones?
Well, most of the determination is actually in the divorce decree, but there are actually options, and people don't realize this. People often fight, I want the child, or the other person wants the child because they want to claim head of household, which gives you a lower tax rate than claiming single. And then you also get the tax, what we call the exemption, or a deduction for having that child, which currently is $4,050. So that's $4,050 of income you wouldn't pay tax on. But there are actually options that allow one person to claim head of household while the other person gets the exemption. So there are different things you can do. And of course, if you have two kids, usually each parent will take one, or various things like that. But if truly one parent is taking almost all the care of the child, they generally get the tax benefits, unless, again, there's something in the divorce decree. And as I said, there's various options you could do, but some of those options have to be written down, and some of those actually need a form sent in with every single tax return.
Oh, wow. So a lot to think about there when it comes to the children. Now, you also have this great chapter, chapter 10, for people who get the book. That's entitled, All Dollars Are Not Equal. And you have this ranking of assets. Can you tell us a little bit more about what you were going for there, and why that's important to think about, or why it's important to think about assets from a tax perspective?
I actually think for finances, for each individual's personal finance, this could be the most important chapter, because $1 in cash is worth $1. But $1 in many other assets has tax implications and even selling implications, and that could lower that value. So when I rank the assets in the book, I say this is in general, because it really depends on each individual couple and their financial situation and their income. But in general, if you have a bank account with $10,000 in it, it's worth $10,000 to you. But if you have, let's say, a home that's worth $300,000, first you have to think about what mortgage is on it. Let's say you have a $100,000 mortgage. So the home's really not worth $300,000 to you. If you sold it, you'd have to pay off the mortgage. But on top of that, there could be tax implications. Now, a $300,000 house doesn't. But if you have gains from when you bought that house to when you sell it that are more than $250,000, you're likely going to have to pay taxes on some of those gains. So now you have a tax implication. Plus, if you have to sell the house, there's a cost implication. You have to pay a realtor, you have to pay legal fees. So you need to think these things through. When it comes to investments, it's the same thing. You could have a capital gains tax on it. And taxable retirement plans seem to be the one everybody wants, but they don't necessarily think through what that means. There's an advantage to taking the retirement plan that all that money's in there, and normally you're limited on how much money can go in each year. But on the downside, when you take that money out, it's taxable. So you're better off with cold hard cash if you need money to live off of or to maybe buy another home because, you can't both live in the same home. So if you are looking for money, you may be better off taking the cash than the retirement, and people need to think this through. And that goes all the way through to debt. If you just say, well, we have this amount of debt, I'll take these 3 credit cards and you take the student loans. Well, student loans are the interest on them as a tax write-off, but the credit cards don't. So you've just handed a tax advantage to the other spouse. So you need to actually think through what the post-tax implication of all the asset and even debt division is for both spouses. And if you can work together, and it is so important that on this part that people work together. If they can work together, they can get the most overall value out of dividing the assets and therefore end up dividing more assets between the two of them. This concept of working together is not only critical for your finances, but it's critical if you have children. It's so critical that actually in the state of Massachusetts, for the children, they make you take a class in parenting. Basically, take care of the kids. It's your divorce, leave the kids out of it. But it works the same way with your finances. And I've shown examples and worked with couples where we can save them several $1,000s, and then they share it, and it makes them both better off financially. And you already have a lot of things to pay for in a divorce, including the attorneys. You might as well try and make things a little better.
I think that's a great message to end on. Beth, what's the best way for people to contact you?
They can read my blog, they can get in contact with me through my email, and they can look at my book information all on my website, which is www.kozlog.com, and that's KOZLOG.
Excellent. I will include a link to that in the show notes. Beth, thank you very much for coming onto the show.
Well, Sean, thank you for having me.
We've reached the end of the episode, but before you go, I want to make sure you check out some really important information at divorceandyourmoney.com. When you get there, sign up for the email list so I can keep you updated with exclusive information and content that you won't find anywhere else. Also, you'll find the one-on-one coaching services where I get to work with you, the show listeners all over the United States. I'm easy to work with, I'm responsive, friendly, and I'll listen to you. We'll get to get deep into the details of not only what's going on in your divorce case, but your life as well. I end up knowing a lot more than your divorce attorney ever will because I don't charge by the hour, it's fixed prices, and you can reach me anytime. We get to work together, understand your situation in depth, your financial picture, and help you get to a settlement that makes sense for you not only today, but for the rest of your life. And I also get to keep you out of trouble and keep you from making poor financial decisions. Attorneys are great at the law, but they're not financial experts, I should say, and a lot of times I see them end up making settlement mistakes that will cost you for the rest of your life. They could be tax inefficient, forcing you to take the wrong asset that you shouldn't be keeping, or trying to get you access to money that you won't really have access to until you retire. And sometimes you need to know those things in advance and keep you out of trouble while the divorce process is going on, because it's hard to change afterwards. And also I get to keep a long-term relationship with a lot of you because even after the divorce settlement is over, you've signed the agreement, it doesn't mean that the process is over. You need to move on with the rest of your life. I have clients that I get to work with for years at a time. I've worked with for years after the divorce is over. They're still clients. I know their families. We go on vacations together. We know their kids, and their kids know me, and we get to have a very nice long-term working relationship, and it all starts with a simple introductory call. We'll talk for 20 to 30 minutes. You just go to the coaching tab on divorceandyourmoney.com, fill out a short form, just tell me what's going on. We'll set up some time to speak, and once we do that, we can start and proceed from there to see if coaching is right for you. I love working with you. It's exactly why I do what I do, and the sooner you book an intro session, the better. It says that you know that you need the help, and it makes easy working with you because we can get into the details of your case and help you craft the settlement that you deserve. Now, book those now because I want to make sure that I maintain a high level of service with me and my team, and sometimes there's a wait list. And if you don't get on top of that now, I don't want to keep you waiting for weeks at a time, where sometimes things in divorce can move by the hour. Now, also while you're on the website, check out our courses. If you like the show, there are some great courses you can get there. They're longer, they're more in-depth, they include visuals, handouts, and even more details as you go through the divorce process. They cost less than the one-on-one coaching sessions, but you'll get a lot of great information from them. They're well worth it. They're better than any book that you'll find on the divorce process out there, and it's me teaching it. It's me talking to you just like I am right now, and it's more in-depth than what you'll get on the show, but it is a great place for you to learn. Some of the courses that are available right now is there's Divorce 101 course. It's called Steps to Take Before Divorce, Everything You Need to Know Before Hiring an Attorney, and also Divorce 102. It's How to Get a Divorce Without Losing Everything, 12 Ways to Avoid Common Divorce Mistakes. They're great courses. A lot of people I know love them. And if you like the show, it's a great place to get more information that I don't talk about here. Plus, as I said, lots of additional resources and custom handouts. And if you don't like the course for any reason, I have a 100% money-back guarantee. And also there's bonuses. So for the people who take the course and you say, you know what, I've spent the time going through the course, getting organized, learning all this really important information with me, and I want a one-on-one session. I want to work together. Well, I give you a discount, a big discount for going through the course and learning that information that is well worth the time that you spend and the money. And the reason is for the people who've gone through the course, and they all love it. The people who've gone through the course are so well informed by the time they start working with me that it's worth the discount that I give because it's just so easy to work with you. And last but not least, leave a review of the show on iTunes if you enjoyed it, and share this information with a friend, and be sure to subscribe so you're automatically updated with new episodes as they come out. I'm your host, Sean Lehman, MBA and Certified Divorce Financial Analyst. Thank you for listening.